Alright guys, we've been noticing a very dangerous trend over the last 2 months. With this trend going on, we see that over the next 6 to 1 year, a lot of altcoins might have their prices drop and drain. What is this trend, you ask? That's market makers moving out of the United States. Market makers contribute a huge amount of liquidity to the market. They make sure that the trades, that when people want to get in and out of particular coins, it's very fluid. If they do move out, they're going to shake a lot of investor confidence, especially these hedge funds that have invested millions of dollars into particular altcoins. They will be afraid that they can't exit cleanly, and hence there'll be a drain overall. So it's actually very critical as crypto creators to understand what market makers are doing in the space and what impact they have in the market. So we got Natalie here. So Natalie's been researching very heavily on market makers in the past few weeks. So if you guys like videos that are deep dives into what's the current dynamics in the crypto markets, make sure you subscribe to this channel. And with that, further ado, I send it to Nat.
So the reason why market makers are so important in the crypto space is because they play a vital role in maintaining the liquidity of the crypto market. So they basically continuously buy and sell crypto, reducing the spread between the buy and sell orders. So this constant supply and demand make the market more efficient and enable investors to execute their trades quickly. And without market makers, there will be a shortage of liquidity, leading to high slippage risk. According to Bloomberg, two of the biggest market makers in the US, Jane Street and Jump Crypto, are looking to move their operations out of the US. And for the longest time, these two market makers have been liquidity providers for the biggest crypto exchanges in the US, such as Coinbase, Kraken, and Binance. And the reason for this is because the US federal governments believe that they're linked to FTX and the Terra Luna crisis. As a result of this, Jane Street and Jump Crypto are retreating from crypto trading in the US as the regulatory environment on the industry has intensified. Both firms are actually still making markets and not abandoning the crypto industry entirely. However, Jane Street will be scaling back its global crypto expansion plans, and Jump Crypto will be pulling back from US markets and expanding internationally instead. So what is causing market makers to move out of the US? Let's take a step back. The SEC has been cracking down on crypto in the past year or so, suing some of the largest names in crypto, such as Coinbase, Ripple, and Binance, charging them for selling unregistered securities. But if you have been following the news closely, you know that these three companies have actually been playing by the rules and cooperating with the SEC. So why is the SEC still charging them? Well, it's not because the SEC has strict rules on crypto, but because their rules are just so confusing.
What the fuck is this piece of shit?
The SEC themselves can't even make up their mind whether digital assets are securities or commodities. They have been asking crypto exchanges to apply for licenses, but never gave them clear directions or what their regulatory framework looks like. Not only that, the actions and views of Chairman Gary Gensler and ex-director Bill Hinman is not aligned. Bill Hinman thinks that ETH is not a security, while Gary Gensler views all digital assets as securities. And the US Congress still hasn't decided which agency should be in charge of regulating digital assets. So how would crypto companies have the confidence that they won't get charged by the SEC if they continue to run their business in the US? So what are the effects of market makers moving out or scaling back their businesses in the US? Well, the most immediate effect would be the crypto markets losing more liquidity. We all know that market makers provide the necessary support in maintaining stability of the crypto market. And if these two market makers are scaling back, this will increase price volatility and reduce market efficiency. And if Jane Street and Jump Crypto are actually moving out of the US, there will either be a loss of jobs or the US will be forcing talents offshore. Millions and possibly billions of dollars will move out of the US. The relocation of Jane Street and Jump Crypto and the departure of skilled individuals and capital will definitely affect the growth and competitiveness, as well as hinder innovation of the US financial sector. We all know that the US used to have a leading position in terms of crypto, but other countries such as UAE, Hong Kong, and Singapore are starting to catch up by having clearer regulatory framework and regulating through engagement and not enforcement. And the thing is, if the SEC is as serious as they are in terms of protecting investors from bad actors in the space, their aim should be to keep crypto companies in the US. They should have clear regulations set in stone as soon as possible, because although we're seeing crypto companies leaving the US, we know for a fact that crypto will never leave the US. Investors will still find ways to invest in crypto, and VCs will still be putting their money into different projects. And according to Coinbase, around 20% of American citizens own crypto. And the result of the US pushing crypto companies away from the US is that these companies will then move to countries with clearer regulations. But this doesn't necessarily mean good investor protection. This will only put US investors in bigger risk of getting scammed by projects. All in all, these big market makers moving out of the US does not necessarily mean that crypto market is in danger. But it certainly is for the US market. The US has long been a leading power in the crypto space, and with these crypto companies leaving the US, this is going to cause a lot of problems for the US financial sector. Because if that happens, the US will lose out on a lot of money, and it's going to be very difficult for them to re-establish dominance in the digital asset market. In today's day and age, it's very important for developed countries to be involved in the digital asset market. And it's even more difficult to be a financial superpower while pushing away a $1 trillion crypto market. So that concludes our video for today. Thank you for watching. I would also like to thank our sponsor for today, Bybit. If you haven't signed up for Bybit, you can sign up with our link down below, and you'll automatically get 20 USDT in your derivatives account. We have also done other videos which give you a breakdown on the SEC lawsuits with Coinbase and Binance, so make sure you check them out. Don't forget to like, share, and comment down below if you have any questions for us, and subscribe to the channel if you haven't already. And until next time, bye!